When you decide to invest your hard-earned money, you need to make sure that you're doing everything possible to protect and grow it. That's why it's important to understand the investment life cycle, what to expect at each stage so you can come up with the best decisions about where to put your money. There are many different stages of the investment life cycle, so let's take a look at them one by one. What is an investment? An investment is an asset purchased with the expectation that it will generate income or appreciate over time. Examples of investments include stocks, bonds, mutual funds, real estate, and precious metals. Investments are often made to grow and preserve wealth, generate income, or hedge against inflation. When you first start investing, developing a clear investment strategy is vital. It will help you determine what investments are suitable for you and your goals. Some particular investor types might seek different investment objectives than others. In the capital market, you will find different types of investment vehicles. Each has its characteristics, risks, and rewards. There are important assets to consider. It would help to be familiarized with the various investment options before making any decisions. What is the investment life cycle and how does it work? It is the process that investments go through from the time they are first purchased until they are sold or otherwise disposed of. The investment life cycle typically has 4 phases. Let us take a look at each stage of the investment life cycle and what you can expect during each step. Acquisition. This early phase starts with carefully considering your investment choices and ensuring you are comfortable with the risks involved. In short, you are entering the planning and the spending phase. Growth. It is when you will start to see the rewards of your investment choices. Be sure to stay informed about how your investment is performing and make adjustments as necessary. Maturity. You may decide to sell your investment or hold on to it long term. If you do sell, be sure to consider the tax implications of your sale carefully. If you decide to hold on to your investment, monitor it closely and make adjustments as necessary to keep it on track. Disposition. It is the final stage of the investment life cycle. Be sure to carefully consider the tax implications of your sale before making any decisions. Once you have sold your investment, you will want to monitor your remaining investments closely and make adjustments as necessary to keep them on track. What types of investments should you consider? The investment choices you make will depend on your investment strategy and goals. Some common investment choices include stocks, bonds, mutual funds, and real estate. These important assets can help you reach your financial goals and plans, whether you're a risky investor or one who's looking for a risk-free investment. Stocks are investments where an individual or company buys ownership in a public company. It is one of the most popular investment types because it has the potential to generate high returns. Bonds are investments where an individual or company loans money to a government entity or corporation. The borrower agrees to pay the loan plus interest over a set period. Mutual fund is an investment where a group of investors pool their money together and invest it in various securities. Mutual funds are supervised by professional money managers and can offer diversification, which can help mitigate risk. Real estate is an investment where an individual or company buys and owns the property. Real estate can be a good investment because it has the potential to generate high returns. Cryptocurrencies are a new investment type where an individual or company buys and owns digital currencies. Cryptocurrency investments are a high-risk investment, but it has the potential to generate high returns. One of the asset classes which is on trend in the investment world today are cryptocurrencies. It is crucial to make sure your coins are safe and secure. The best choice to store it safely is through hardware wallets. Affiliate disclaimer: Moovmynt is supported by the people. When you purchase through links on our site, we may earn an affiliate commission that helps support our website and its content. Learn more. Ledger wallets are considered one of, if not the most reliable cryptocurrency wallet solutions out there today. With their commitment to safety and security, these top-notch hardware wallets have become one of today's most trusted financial tools. Check out Ledger wallets today. If you want to learn more about wallets and safely storing your cryptocurrencies, check out our previous post. What do you need to know to manage your investments successfully? To manage your investments successfully, you need to understand the investment process and the different types of investment vehicles available to you. You also need to be aware of the risk involved in investing and being comfortable with taking on those risks. Steps to manage investments. Understand investment process. Different types of investment vehicles. Understand risks involved. Be comfortable with taking on risks. Finding an investment strategy that fits your goals and risk tolerance is important. Investment securities are also constantly changing, so it is important to monitor your investments and adjust the funds invested to future uncertainties. You also need to be aware of your business's current and future expenses. When you're thinking of retirement investing, there are options that you might want to consider. There are choices from the items provided above, which include stocks, bonds, mutual funds, and real estate. On the other hand, every investor behaves differently, and their investment strategies vary. To cite a real-world example, let's say you have $100,000 that you want to invest. Some would prefer low-risky investment, while others would go big or go home. Technical analysis is a great way to help you in your investment decisions. Technical analysis can help you spot trends and identify opportunities for investments that might otherwise go unnoticed or untapped, making it an invaluable tool when investing wisely. Affiliate disclaimer: Moovmynt is supported by the people. When you purchase through links on our site, we may earn an affiliate commission that helps support our website and its content. Learn more. TradingView is here to help you improve your skills and learn new strategies. Indicators are just some tools that will make it easy for beginners and experienced traders to start their journey of investing. The best part about trading on TradingView: you do not need previous knowledge or experience because they have everything to help with your investing journey. Check out TradingView today. To learn more about technical analysis, check out our previous post. The importance of diversification and why you should always have a plan. Diversification is essential because it helps to mitigate risk. By investing in a variety of assets, you can protect yourself from losses if one investment goes sour. It would be best if you also have a plan to know when to buy and sell your assets. Monitor your investments closely and make adjustments as necessary to keep them on track. Doing so can help ensure that your investments are working for you and meeting your investment goals. You should also review your overall portfolio periodically to ensure it is still diversified and aligned with your investment goals. Another helpful plan is to develop a capital reservation option and fixed income securities. It will help to ensure that you have the funds available to cover any unexpected expenses that may come up. The planning phase should be continuous. Tips for staying on track with your investment goals. Staying on track with your investment goals can be difficult, but it is important to remain disciplined and patient. The investment process takes time, and there will be ups and downs. Here are some tips to ensure your financial condition for future inflation. Monitor your investments closely. Make adjustments as necessary. Stay diversified. Have a plan in place. Be comfortable with taking on risks. If you want to learn more about how to secure your investment, check out our previous post. Final thoughts. So, what have we learned? First is that there is no such thing as a get-rich-quick investment scheme. There is a different phase of the investment life cycle, just like there are different stages in our lives. Just as we need to learn and grow during childhood, our investments must go through the same steps before they can generate returns for us. Secondly, investments go through different phases, from accruing value in the growth phase to maturing and generating income in the stability phase. Finally, it's important to remember that every investment is unique and will follow its course. What do you think? Have you gone through any of these phases with your investments? We hope this article has been helpful and that you will check back for more content soon. Thank you for watching. Disclaimer: Moovmynt provides educational content only. It should not be taken as professional financial advice.